On the road in Kansas City with the nation's ag bankers, talking now with Darrell Holaday, president of Advanced Market Concept. And Darrell, yet again this year you talked with the bankers, kind of a crop update. And last report, we're just about wrapped up with harvest. Harvest pressure is still there. I guess most farmers, most folks are looking to a rally. Will we see one in the near term?
I think the best chance for rally is really in the next, if I'd probably categorize as maybe a Christmas present as we move into Christmas. I think that's where you'll see some strength in the grains and the oilseeds. Beyond that, I'm not very optimistic. I'm not sure the new year will bring us any really good opportunities. As a matter of fact, I think the opportunity is the next 45 to 50 days. Just because the world fundamentals are not very good, and I think that's the opportunity people need. That was the message I want to get to people today.
Well, let's look really at the short term this week. So far, we're in the middle of the week, but you got to kind of scratch your head. What's going on with wheat, soybeans, especially?
Well, we kind of took off the week with the fact we saw some strength in the wheat, and weakness in the soybeans. The wheat price, we've seen the world wheat price get better in the last couple of weeks. And now but wheat is really cheap. I mean, I think even those of us who've been bearish wheat look at that and go, "Wow, that's pretty cheap." And so we anticipate some strength there. The funds are way oversold on the wheat, and so there was some short covering. The soybean market, really, I'd anticipated this week would get a little bit stronger, and I still think we might end the week get going a little bit better. Primarily, I think the problem hurting us this week is actually the Argentine elections. It's kind of a long story, but the reality is there's going to be a real tough race for a presidential election. It looked like the pro-business candidate down there made a very strong showing, and that candidate really wants to drop their export tax and really make them more aggressive than they've already been with soybean exports, and that tended to make the market a little bit nervous, and I think that is part of why. But that really shouldn't impact us the next 45 to 60 days, but sometimes weird things happen in markets.
Let's look at this corn market. As we're seeing the combines roll, yields, as expected, a little better than maybe what many had hoped.
Yeah, no doubt about this. I think when you look back over this year, you look back at the corn yields will be the one that impresses you the most, primarily from the standpoint it had a very tough start in a lot of regions. Now, a lot of regions it had a very good start, but when you look, just when you get out there in the field and you realize the genetics and the management that goes into a corn crop anymore is quite phenomenal, and it all came through. And once we had all of the problems early in this, May and early June, really from that point forward, it got what it needed in a lot of regions. Now we still have regions like Northeast Illinois, Northwest Indiana, parts of Ohio, Central Indiana that were all Northeast Missouri, all areas that were disappointed in their corn, but they did even better than you thought. And so we still have a lot of corn to contend with, but at the same time, ethanol is still a big player. Unfortunately, the ethanol margins are a lot tighter than they were a year ago. And we're going to see a difference we're going to see some tremendous disparity with strong basis levels in the East, weak basis in the West. So the ethanol margin is going to be a little better in the West, not so good in the East. But unfortunately, we're trying to sell ethanol 20, 25 cents above unleaded gas, and that's going to be a tough road for ethanol producers to deal with.
As we look, kind of playing in with that sorghum, your area, a lot of your folks, I'm sure, are seeing relatively good yields in sorghum. But let's throw all that together, and with one word, China. China is still the key in all this.
Yes, it really is. They really playing a bigger role in the coarse grain. They definitely played a role in the sorghum last year. They're slowing. And they were a little bit political with what they bought with sorghum last year, but they're going to hurt us because they're not going to be a DDG market. They're not going to buy as much sorghum. They're going to continue to buy a lot of soybeans, but their slowness of their economy is there's no way. We bank too much on China, and for us not, we will feel it when they slow, and they are slower. I wouldn't say they're in a real tremendous funk. I would just simply say that it's I think one of our problems, we got used to their exponential growth for the longest time, and now that they become a little more reasonable, markets have a hard time adjusting.
Of course, this time of the year, before harvest wraps up, we always look to next year. What are you hearing? Any indication are that acres will stay about where they were? We see a slight shift one way or the other?
Right now, I think the most anticipation is maybe a slight shift to a little more corn and a little fewer soybeans, but I really, at this point in time, don't see any major shift. I think that would be more procrastination than anything else, and I think wet markets will have more of an impact on that. I don't know as I would see a dramatic shift. I do think we're going to have to try to pull some of the costs out of this system, the agricultural system, because the world market is not going to let us have this price that we'd like.
Okay, before we let you go, let's talk a little bit about proteins. Cattle market is still we scratch our head at the prices, I think, on both ends.
Yeah, we've gone through the full gamut now in the last year or even the last few months. Just 3 weeks ago, we were trying to find a way to get rid of cattle. We had the thing that's ironic about 3 weeks ago is one thing I saw there that I don't remember ever seeing in the cattle market was panic selling in the cash market. I was really strange. In the northern cattle feeding areas, they just literally had fed cattle too long, and they finally realized that, and they had to panic sell. So we went too low. Of course, we had been too high, but that's the way markets, when you get in tight supply, have to do. They have to find where it's too high. Then we got a little bit too oversupplied, but now we're running back here. But I think that once again, I think the issue in the cattle market is competition in the proteins is very stiff. A lot of chicken, a lot of pork. Exports are going to struggle once again. That probably they're maybe hurt more by the dollar index than even the grains are. And so the reality is I think we're dealing with a market that's going to, as I like to tell cattle producers, the low-hanging fruit has been picked. It's going to be a lot harder business. Break-evens are going to be tighter. Margins are going to get tighter. The beef industry is going to grow. We're going to expand. We need to, and that'll all be good. But then, you get the World Health Organization throwing their little 2 bits in, things like that. We just always are dealing with it. And unfortunately, we've lost a lot of equity in the cattle business in the last, month and a half.
So with the cattle the cattle herd expanding, pork continue to expand, the freezers seem to be full. TPP, other type of trade deals that we're working on. Will this bring a more bullish tone then?
I think it will. The only thing I would say negative about TPP, and I'm talking about from an economic standpoint, I'm not the political end of it,
right,
is that whether it gets done soon enough. Okay. We need it now. Because I like no matter how you look at it, and obviously everybody's got a different angle on TPP, but the one who really benefits is meat production in the United States. We need that trade agreement. There are many who will argue whether we ought to have that. I'm not in that debate. I'm simply saying, bottom line for pork, poultry, and beef, TPP is critical, and if it was done tomorrow, it wouldn't be too soon.
All right, Darrell, folks want to talk more with you about all these different ideas. How can they get a hold of you?
Well, the best way is to email me at dholaday@amcplus.com. Also, you can reach me on a daily basis at 800-292-4038.
All right, Darrell, thanks a lot.
Thank you, Ken.